Ladies and gentlemen, how are we doing? Matthews here from Emmanuel Forex Traders. I hope you're doing great. So I'm here with a trade breakdown of USD Swiss, an absolutely beautiful trade that we took last week. So let me just show you the breakdown and everything else. So let me just go ahead and delete the chart and yeah, so that we can start from the beginning. All right, so first thing first, trade in the direction of the major trend. All right, first of all, you have to know where the market is headed so that you are trading with it, not against it. All right, so what happened here is that we saw this beautiful trade before all this happened right here. So we had a nice rally based drop supply zone right here. So you go ahead and identify your QML. So you can actually see that we had our QML right here. We had our QML right there. Okay, we had our QML here, and then yeah, we had our change of character after this low was broken at this level right here. So we go ahead and add our trend line right there, which signifies break of structure or change of character. Okay, so this right here. And then what you have to do is identify your levels of resistance. So you're looking at this level, so right here. So we had a lot of areas where the market was being respected. So we had this right here and another one right here. So this is what we call liquidity area or liquidity zone or fake out zone. Then this right here, I'm just going to go ahead and label that. Okay, right there. Okay, so remember after this QML we had a low higher high right there. We had a higher high here, and you can clearly see that the market gave us a new lower low right here after the market broke that level right there. So the next thing is to actually find the order block. So where is the order block? The order block is going to be found somewhere around this level right here. So I'm going to go to the 50-minute time frame for us to find our order block. What is a bearish order block? That's the last bullish candle before the bearish move. So we are going to go ahead and look for that, and you can clearly see that it's literally just here. So we are going to get this and cover the high and the low of this thing right here. So we'll go ahead and go back to our 4-hour time frame. Yeah, we'll go to the 4-hour time frame, and yeah. So what do? We extend this to the right side, bam, and just like that, we are there. And remember, this is our what? This is a rally base drop supply zone. So right there, you add your rally base drop supply zone, and just like that. Okay, remember, we find the order block and then wait for the liquidity to be taken out. Why do we need the liquidity to be taken out? Because above this liquidity zone, there's a bunch of stop losses. There are a lot of stop losses around this level because people are trying to sell from here. You can clearly see that when the market came to this level, it dropped a little bit and then pushed to the upside because there are sellers right here. So once those sellers have been taken out, then we wait for price to actually come to our zone right here. We wait for our confirmation, and we can clearly see that we had a beautiful rejection right here, and then we saw the market rolling over to the downside beautifully. Okay, so that's what happened. So our stop loss on this particular trade was about 40 pips, and our target was about 400 something pips. It was an amazing setup, right? It was an amazing setup right here. You can clearly see how it was. I'm going to show you the before picture of before this happened and everything else. So let me just go ahead and show you. This trade was actually shared with our public community right here and also our private community. It was an amazing trade. It was shared after we took this loss right here. So we had this beautiful trade. This was the before picture. You can actually see that the stop loss was 40 pips and our target was like 470 pips, And you can clearly see we entered right here after this market gave us this nice rejection right here. So this is the proof that you can actually see that 250 people saw this, right? So I hope you guys took advantage of this. I hope you made some money from this particular trade. You can clearly see that it reacted beautifully from there, and yeah, this gave us a beautiful result. You can clearly see that the market moved about 290 pips. Absolutely amazing. 290 pips. And yeah, it was an amazing trade, and personally it was able to give me about $967. This was the sell trade I took on USD Swiss, and absolutely amazing. This is my FOREX account, and currently I'm up $991. I'm just remaining with about $250 for me to hit my 5% on my FOREX trading account, which is a $25,000 account. All right, so let's get back to this trade right here. This was an absolutely good trade, right? But let me ask you a question. Do you think I knew for sure that this particular trade was going to work? Do you think I knew? No, I had absolutely no idea that this particular trade would work. However, what I have, or what I had, is the confidence in my system that over a series of trades, I'm going to make money. I'm going to be positive. I'm going to have a positive expectancy over a series of trades. I have that belief, and that beliefs comes from back testing and forward testing this strategy, and over time it has shown to have a positive expectancy. This setup alone gives me about 1 to 13 risk to reward ratio. Do you know how massive that is? Meaning I can lose 13 trades and only take one trade that hits take profit, and I'll be able to make back all that just with one trade. That's how significant this is. It doesn't mean that you're going to win all the time. No. There's literally no way to know if you're going to win this particular trade or the next trade or the next 10 trades. There's literally no way to know when you're going to win. What you have to have is a process-based approach where you are taking a larger sample size with that expectation that you're going to have a positive expectancy, not on a single trade, not in the next 10 trade, but guess what? Over a series of trades, not just this trade or that trade right there. If you come with such a mindset, you are going to be frustrated by the result, because the results are so random. They are very random, such that there's literally no way to know what's going to happen. So it's extremely important. So have that mindset of where you think in probabilities and think in larger sample size, not 1 or 2 trades. The strategy itself works, but doesn't work 100% of the time. So if you come with a mindset thinking you're going to win 100% of your time, you are going to waste your time. And there's no such a strategy that works 100% of your time. So please shift the way you think about trading, and you see that it's actually not as difficult as you might put. The most difficult thing that you have to deal with is your psychology, not the strategy. Focus on your psychology. Manage your emotions. Learn how to master your emotions. Then this will become a little bit easier. However, if you just focus on the strategy, this will be the most difficult thing you will ever encounter in your life. Trust me on that one. So you guys, make sure that you subscribe, like the video, comment in the comment section. Let me know what you think about this video. All right. So you guys, until next time, please take care of yourself. Goodbye.